Quite honestly, for the last couple of years, that's been the right thing to do because the AI trend has been so strong. But I think what investors should be concerned about is if you look at the biggest spender by far on AI CapEx, it's Microsoft. And part of that is obviously Microsoft has a 49% economic interest in OpenAI, which started this whole AI theme, which with their introduction of ChatGPT at the end of 2022. And Microsoft's CapEx has been growing at 70 to 80% year over year for the last 6 quarters, if you include December. But on January 3rd, they came out in a blog post and said, we're going to spend $80 billion on CapEx in their next fiscal year, which ends in June. But if you go and do the math, they already spent 20 billion in September quarter. They guided that up for the
Right.
December quarter. And so you go, well, wait a minute, that means there's more than 40 billion in the first 6 months of fiscal 25, which means they're going to spend less than that in the next 6 months after growing 70 to 80% year over year for the last 6 quarters. So if you're any kind of chip company that sells into Microsoft or any of these other big hyperscalers, I think you're going to see a dramatic slowdown in revenues by the time you get to the middle of the year. And by the way, that's what you saw after all that investment during COVID. Because don't forget, NVIDIA, which is the poster child for this trade, their revenues before COVID were negative year over year for about 3 quarters. And then COVID hit, and then the revenues surged to being up over 80% year over year by the beginning of 2021. Because we're all locked up, right? We're
Right.
all going online. Then once we all get unlocked, those revenues went from up over 80% year over year to down over 20% year over year. The stock got crushed, went down over 60% during that move from peak to trough. And then you got the AI
Right.
trade and you're back up to these levels. But I think you're going to see another slowdown after growing for 2 years over 100% year over year in revenues.